I'm Simon Guzowski, Senior Portfolio Manager at Beresfords Asset Management. Well, this week, Europe has continued to dominate the headlines, so we thought it would be good to drill down a little bit more into what's happening. We see three key problems. First, unemployment. If we look at this chart here, unemployment levels are not only high at 11%, but are rising further. Obviously, this is a bit of a policymaker's nightmare. Add to that, high debt to GDP levels. Look at a few key countries here. Italy, on this chart, has debt to GDP of 120%. Now, anything above 100% is often considered quite dangerous and even a point of no return. So Italy, clearly a concern. Spain, 60% on this chart. Doesn't look too bad, but the key thing is the trend is rising and unemployment there is through the roof. That's also a problem. Now, a lot of people look for a bit of hope from Germany and France, the powerhouses of Europe. But we'd say there's a bit of caution warranted here as well. They both have debt to GDP here of more than 80%, and again, that trend overall is rising. Now, the final problem is that 27 nations in the Eurozone seem to have to agree every time some sort of solution is put in place. And we're really not seeing a lot of cohesion from these 27 member nations. So until they really start agreeing and pulling out some serious policy solutions, we think we'll get more and more bad news out of Europe for some time to come. Now, does this mean we lose all hope? I'd say probably not. The United States is probably a good example of what can be done if people get their act together. Here we have the United States unemployment rate going through the roof. You can see they accelerated very, very quickly early in the GFC, up to 10%, but now it's really been improving over the last few years. So I think that's very positive. A lot of the policymakers there are quite famous for using bazookas for small problems. But what these bazookas did was make sure that everyone knew the government was serious and some big solutions were in place. Now, there was talk of depression. Clearly that hasn't happened. Debt levels admittedly are still high in the United States, but not rising as quickly as they were. So I think not all is lost for Europe, but for some time we'll probably keep seeing bad headlines come out of there, and there is risk to financial markets. So in this environment, we're keeping things conservative and we're being cautious about what we invest in. That's all we have time for this week. Thank you for joining us. I look forward to seeing you next time.